Stock market pumped, middle class dumped. Hey everybody, it's JJ. You're watching Bull, Boom, Bear, Bust. It's April 19th, 2021. We're going to go over some news today, show you some charts, and we're going to tie in two different scenarios here, or two different views of what's happening here in this economy. First, let's take a look at the pumped up stock market, and it's pumped up on leverage, on debt, on trading firms borrowing as much money as they can to trade it in hopes of turning a profit in order to pay back the debt, and then of course still make a lot of money on top of that. Now, more and more investors are taking out margins to trade with. So when you're trading on margin, if you have $1,000, if it's doubled, you can trade with $2,000. The problem is if you lose, you have to pay back what you lost plus the margin amount. And this is true for everyday retail investors on Robinhood and also big trading firms. Now let's take a look at this chart right here, and we see how much debt and leverage is being used. That is in the yellow. That is negative free cash, the yellow line on this chart right here. Now compare that to the housing bubble and also even the dot-com bubble before that, and you can see we are in uncharted territory once again. Back when the dot-com bubble went bust, people thought that was the ultimate bubble, that this was never going to happen again. Same thing with the housing bubble. Home prices much higher now, much more debt now. People thought that would never happen again. Here we are again, the everything bubble, and it's based on debt, so negative free cash. Now when you see here when the recession hits, then they had positive cash flow, right? Because everybody pulled back on investing, people were scared, recession, and that's, you see the green down here, but the negative is in the upward slope in the chart. So you can see we are heads and tails above any previous bubble, but yet there's people out there that still say this is not a bubble, no problem, nothing to worry about here, move along. Now also this chart gives us the dark line here. That's the S&P 500. So as you can see, more leverage, more trading done on debt pumps up the S&P 500. So it's not a coincidence that we see record debt, record margin with new all-time highs on S&P 500 continually. All right, so isn't it interesting that we have unlimited trillions to throw at the banks so they can continue to loan out money to trading firms, investment firms, letting them borrow and trade on leverage, and then when it all comes crashing down, when something does happen, to throw a monkey wrench in this machine, then the banks just get bailed out. Speaking of stock market bubbles, let's take a look at this other chart of the S&P 500. The current jump in the past 1 year, since March 2020 to March of this year 21, is the third biggest year-over-year increase in 100 years. The only ones larger were coming out of the Great Depression. They're 1933. And we kind of saw a double dip recession back then, or depression in this case. And then another recovery, which led to the second biggest year-over-year increase in 1936. And here we are now, the third largest. The only thing beating this current year-over-year increase is the Great Depression. But yet, people still are all in on these markets. Nothing to worry about, no problem. No reason to be cautious, because the Fed with the endless printing press is going to be there forever and ever and ever. That's what they say. You see, when you have endless amounts of money that's created out of thin air thrown at something, it's going to exaggerate the price. That could be the stock market, the housing market, automobiles, with all the lending and liquidity and debt, margin borrowing and splurging. The same is true for people borrowing money. The price of goods and services should not be where they're at right now. People shouldn't be able to go out and spend this much money that they don't have. And there are consumers that just go out every 10 years and file bankruptcy, run up more debt, file bankruptcy, run up more debt, file bankruptcy. And I'm sure they're leading a pretty good life. They can travel, they can buy whatever they want. They don't have to shop for the lowest price because they know bankruptcy is going to be there every time they need it. So there are people that abuse the system of bankruptcy. On the other hand, people need bankruptcy. Sometimes there's a medical bill that people just can't handle, and they're not trying to run up debt on purpose. A lot of times people are very careful with their budget and their spending, but yet something still happens, job loss, medical bills, unexpected expenses, that throws them into the bankruptcy situation. But my point while looking at this chart is anytime you throw a bunch of money that doesn't exist at something, the price is going to be exaggerated. That's what we see in the stock market, the housing market, car prices. It all comes back to the banks in our system of lending, where again, banks can loan out endless amounts of money that doesn't exist with no real risk. They're just going to get bailed out when consumers finally cannot pay back the loans, or the loans and debt will be forgiven so we could start all over again, kind of like a bankruptcy, but on a broader scale. So yes, the stock market pumped up on leverage and debt, the same way prices in other areas of our economy are pumped up on leverage and debt. Everything from car loans to homes to rents. And also you have to add the moratoriums and the forgiveness programs into that. The prices would be much lower than they are today if moratoriums and evictions were allowed to happen. Now, in some cases, evictions are happening and people are slipping through the cracks. Let's take a look at another story. So jumping from the stock market to the evictions, and we're going to connect it here, so bear with me. Losing it all, mobile home owners evicted over small debts during pandemic. And to me, this is a sad story. This is someone that had their home paid off, but it sits on a small plot of land with a little bit of grass that is not theirs. They're paying lot rent. Right now, this is their new home that they're renting, but the home that they owned, that got taken because of back due lot rent. Let's take a look at that home. You can see the home right here boarded up as they walk away, and it's the small plot of land that you see around the home that they're sitting on that they don't own, but that home is paid off. But yet the homeowner lost her home. The landlord gets to take, of course, kick them out first, and now resell the home because it sits on the landlord's land. So the landlord made all the profit during all those years for the lot rent that they paid for years and years, and now gets to keep the home because it's on the landlord's land, and sells the home for an additional profit. Okay, now I am one that said evictions need to be allowed to happen, but here's the thing. If we didn't have the endless fiat money creation, then everything would be more affordable, and people wouldn't be forced to live on land that they don't own, because why? Home prices would be less, more affordable. A lot of people are resorting now to living in mobile and modular homes on land that they don't own because they can't afford a regular home, which would sit on their own land. That's the problem. So you can't have one without the other. You can't say let's evict people without fixing the underlying issue, and that's the cost of living inflated because of the endless money printing and debt creation. So if we are going to allow people to get evicted, then we also need to stop the endless money creation, because that's the underlying cause of the whole situation, where people are forced to live in homes, again, that sit on land that they don't own. Right? So let's ask ourselves, why do we have unlimited trillions to throw at the banking system to continue banks lending, even though the money doesn't actually exist? It's just digits on a screen, but they're able to loan out endless amounts of it. But yet we don't have endless amounts of money to help people that are losing their homes. Ask yourself that question, and once you find the answer, then you'll know the key to solving this whole problem. Until then, we have to live within the system. We have to try to maybe even profit from this. Assets that are going to rise in price. We've seen digital assets go crazy here over the past few weeks. As prices have been rising in digital assets, I've been selling some off, going and getting more hard assets, more silver in my case. But also be ready for the monkey wrench to get thrown in this machine. I think something big is going to happen, I'm guessing, this year. It could be unrest and craziness across the United States. With the type of population we have here, people are going to cause a lot of havoc as we continue into the year, is my guess. Or we might see some sort of systemic failure with a maybe some sort of cyber attack where the banking system will freeze up. I don't know exactly what's going to trigger it, but something always jumps out of the woods, out of the shadows here with the Black Swan event. So stay cautious, everybody. Stay prepared in either direction. But a lot of people are going to be losing their homes, especially mobile home owners, because of the lot rent. I know somebody here in California that pays over $1,000 a month just in lot rent, so they can pay off their home, but forever and ever, they're going to have that lot rent $1,000 per month. And on top of that, they still have to pay taxes on their home. So someone in a mobile or manufactured home is much more likely to get behind and get their home taken. And we can see it in this breakdown right here. Manufactured housing homeowners, and these are homeowners that are behind on their payments, 17% for manufactured and mobile homes. Single family homes, only 9%. So you can see that lot rent is really coming to bite a lot of people, right? And there's other factors also, but the lot rent is a big one. Get ready, folks. It's just starting to hit the fan. I think we're only in the first inning here. When it really hits the fan, I think you're going to see some real sad times, some real tough times, dangerous times in the United States. Stay vigilant, stay well, stay safe, stay prepared. And I hope to see you down in the comments on this one. Hope everybody is good. Have a good day, everybody. Thanks for watching this broadcast. Bye for now. Peace.